Hey guys, what's up and welcome to a new Tesla update video. So today let's go over the market, talk about Tesla, talk about the market, what happened, what's in store, I guess, potentially for us for the rest of the week. And as usual, all that good stuff. So if you guys enjoy the video, don't forget to hit that like button. But let's just jump into it. Tesla ending the day up 1.56%, sorry, 58%, ending the day at $304.42. Compared to the market itself, the market was up just over 8%. So Tesla doing, fairly okay, pretty much more or less in line, maybe slightly underperforming, but not anything noticeable or, anything worth mentioning, I guess is the way to put it. So it's a pretty interesting day. This is one of those markets right now, or I guess this is one of those parts in the market that we're in where this, in my opinion, is where it starts getting a little bit difficult to kind of determine as to what is in store next for us. So I want to show you guys something very quickly before we actually get into the charts. Very, very quickly. So usually whenever, what I've noticed is this is a way to judge sentiment. Whenever Tesla has, I guess the market in general, which happens to include Tesla, has like a parabolic run up like this, or like over here, or, like over here, especially over here, things like that. I always start, somewhere, albeit I will admit, I always call it a little too early, a couple of days early, but I always start telling people to be careful, right? Not financial advice, of course, make your own decisions, but I tell people to start being careful because, again, usually run-ups like this don't last, and usually they follow up with, decent moves to the downside. And every single time we have a run-up like this, anytime we have these kind of run-ups like this, these kind of, multi-day green run-ups, like this one we're in right now, for some reason, these kind of comments, there's one comment that I think it was this one. Yeah, like comments like this. Question, Mr. Know-It-All, the way you talk, clearly you would have missed a massive 10x run in 2020, right? Let's see if you have the balls to answer. Like, first of all, I don't know who even writes these kind of comments. First of all, it's just quite cringe, number one. Number two, for some reason, every time we have parabolic run-ups, you have these kind of like idiotic comments just kind of coming out of nowhere, like coming out of their caves, essentially. And this happens every time. It's almost like clockwork, to the point where I'm almost convinced that it's some kind of like bots. Like, it just happens every single time. And to every single time this happens, the market has been at a top, or at least is very, very close to a top and a turning point. This has happened every single time. I've noticed that. I don't know. It's weird. It's really weird at how like clockwork it is. But with that being said and done, whenever you get those kind of idiotic comments, just again, not financial advice, make your own decisions. The top, at least for the short term, is very close. Whether it's right now, whether it's in a couple of days, the point is that it's around the corner. It's very, very close. Just keep, take that as you will. But taking that kind of stuff out of the way, the sentiment out of the way, let's take a look at the actual technicals. So first and foremost, by the way, guys, tomorrow we have the CPI print, which, we have CPI, I think tomorrow, I think PPI is Wednesday. We have I believe jobless claims on Thursday. We have a week full of like information like that, important, like information on its way, essentially, with tomorrow being one of the biggest ones being CPI, of course, right? So take that as you will, that could determine quite a bit. However, taking my bearish biasness away, because I am still bearish for the medium term on Tesla, the market itself, etc. Mainly because I just think technicals are saying that we have further downside ahead of us, right? And I showed you guys that one picture that I'll show you guys one more time. Over and over and over again, but based on this as well, the historical pattern, September, of course, we always have this kind of sideways to a run up until about halfway of September, which pretty much is this week, followed by a massive downside, which can happen later this week or next week, based on the historical, I guess, pattern, if you will, here. And it's been quite accurate so far, so just take that as you will. However, all that being said and done, the technicals still don't look that bad, which is why I'm not convinced that the, I guess, fall is going to happen just yet. I mean, tomorrow's CPI print can of course change quite a bit, but very quickly, let's go over the actual major technicals that we care about. So first and foremost, the EMA, 21 EMA, well above that. The Bollinger Band, we are kind of in between the green and the white now. So in my opinion, best case scenario, we do like a triple top up here, maybe even a quad top, but pretty much a triple top in my opinion, somewhere around this kind of 312, 313 area. I personally would be like quite surprised if we go much farther than that. And if we do, I will be extremely shocked if we go past 325. You can see a bunch of resistance over here that, was quite hard to push under. That took a massive candle, like a disgusting candle to go under. So a lot of resistance here because old support becomes new resistance, right? So in my opinion, like the realistic best case scenario is 325, and the other one that to watch for is going to be 312-ish, give or take, somewhere around the lines of that. And I wouldn't be surprised if we at least come to 312. That wouldn't completely shock me, mainly because the RSI is actually not looking that bad. It ran up quite aggressively here. It went up a lot higher than these levels here. So it's not looking that bad. Like, it's not looking amazing, but it's not looking like just obviously bearish either. It's kind of in limbo land, in my opinion. So personally, what I would love to see after we finish talking about these technicals over here, the 50 moving average, well above that, 200, we're actually above that as well. It's the second closure now above it, which is interesting. Again, I want a multi-day closure above the major things like, the 200 moving average. I want to see at least the next 2 days. I want to see Tuesday and Wednesday to close above the 200 moving average. And then, maybe we can actually start talking about moving up to 312, maybe even 325, right? If we can get that. Tomorrow could be a pretty big day, though, to see how this performs, and what it kind of has in store for us. So we'll see what happens with that. However, personally, what I would love to see from Tesla is, first of all, I'm surprised it actually went up even this high. I really thought it would not break above this kind of 303-ish level, this pretty much rectangle that I drew. I don't think it would go much higher than that. It actually closed above it. And on top of that, you can see it was kind of setting up like a very small bull flag, if you will, intraday today, right? But this is why the market becomes a little bit difficult, because you can view this in two different ways. You can view this as a potential bull flag, which it just broke out of, retested successfully, and now it's ready to rocket tomorrow potentially. That's one way you can view it, which is the bullish biasness. Or if you're if you want to view it from like a bearish biasness, you can easily view it as a potential bear flag like this, right? So you would eliminate this, and this is a bear flag setting up right now. A little bit of a drop, run up a few times like this, and then a massive fall. So it's just that's why this is like a really kind of interesting situation that we're in, where you can view it both ways, and it's really hard to determine which one is the correct one at the very moment, because the market is being extremely difficult right now to truly predict and understand where the next move is going to be. So that's just something to consider, right? Now, the one thing that, obviously makes me a little bit more bearish is the fact that, naturally we have quite a multi-day rally, a pretty aggressive one as well, with several gaps below us. And we're approaching some decent resistance on the SPY, for instance. And Tesla's, approaching some decent resistance in this general area, especially just above us at a 312, which is not really far from here, right? That's only about another 2.5 to 3% move from where we are right now, which is a fair move. It's not a little, but, it's not a crazy move either. So it's just, it's hard to be bullish as of right now until I see some red first. And the reason I want to see red is because I want to see how far the red goes and where the bulls step in to counteract the bears once again on some weakness. Ideally, what I want to see right now is I want to see some red, right? Tomorrow's Tuesday. Like I said, Mondays tend to rhyme with Fridays. We've seen this over and over and over and over and over again, right? Several times at this point. So hopefully you guys are, kind of getting accustomed to that. And Tuesdays are usually the opposite of that, which, in this case happens to be not good, right? Red Tuesdays for tomorrow, in theory. So with that being said and done, where is the drawing tool? What I want to see essentially, I don't know. I don't even know where I put the drawing tool, I'll be honest. It's somewhere around here. I don't know where I put it. It might be this one here. It is. But ideally, what I want to see is I want to see a drawdown to somewhere around here, a retest of the breakout of the red line, which will put us around 290. And then a potential move up to like 311, and maybe if we're lucky, even 325. That is kind of what I want to see. And the reason this makes sense is because if you were to use the Fibonacci's on this, right, it actually lines up quite well, because if you were to take the Fibonacci, go from the swing low to the current high, assuming this is the current top, this is assuming this right now is the short-term top, and tomorrow's a red day. It would not surprise me if we bounce off the 0.382 and worst case scenario, the 0.5. Somewhere, one of these two levels right here would not surprise me, but personally, I'll be looking for the 290 being the 0.382 Fibonacci, which would show a decent amount of strength still left in the market for now, at least, before we actually have the true red, in my honest opinion. So that's kind of what I would not be shocked to see, because it lines up with the retest of this red line that we just, finally came out of once again. On top of that, we were in an arguably kind of, let me remove this. It's like a little too cluttered. If you go to, let's say, the 1 hour, right? Actually, let's do 2 hours. It's a bit easier, right? We were arguably breaking out as well. If you want to, make it another kind of assumption, what is going on here? We were breaking out of this right here as well, right? So this is another way to determine it. And if we were to draw this like this and go back to the daily, for instance, right? Something like this, give or take. Then this would line up with the next level of the Fibonacci that I just talked about, right? So again, we have the 0.382, which lines up with the red line. However, the 0.5 is also completely valid and perfectly fine if we retrace that for the bulls at least to bounce off of this. And if that happens, then that's pretty much retesting this red line that we broke out of over here as well. So either one, in my opinion, would be pretty good. But what I want to see, again, if you're a bull and you want to see this move higher to maybe 312 or even 325, is you want it to come down to one of these two levels, being the 290 or 285. The bulls want to step in, bounce off of one of these breakout levels that we had and then move it up even higher. Is that possible? I definitely think it is. The market doesn't look that bad at the very moment for the short term. I want to make that extremely clear for the short term. It's not looking that bad, but it is a little bit overextended just for the very medium short term time frame, mainly because it's just a lot of green. Like it's just so much green to the point where you want to see a little bit of red to make this move to the upside healthier, because the more red in a row, the higher the green, or the more vicious the green will be once it's like a short squeeze essentially. And the vice versa is quite opposite as well, right? Or quite true, I guess, where the more green it is in a row, the more parabolic the green is. Like in this case, we're just green, 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 green. The more vicious the red will be when it does come. It's just that's just kind of how it works. So ideally, instead of just having a bunch of green before like one massive red candle that can just completely eliminate days and days of green, what you want to see is a move up like this, followed by a retrace. So again, if you look at the SPY, same concept. You want to pretend this is like the swing high at the very moment. Oh, this is QQQ. Let's do the SPY. I've been tracking the SPY a bit more than QQQ. So something like this, right? And the same concept applies where you want to go down to maybe the 0.5 or the 0.382. Personally, I think the 0.5 makes a lot of sense here. Also because it just happens to be a beautiful gap fill at the 400. 400 is not only a psychological support, but just a natural support as well. As you saw, we've had many times where we bounced off of it as a support and a resistance before, and it would just make a lot of sense. But this isn't the market that makes sense a lot of the time either. So it always will find a way to make the move as, I guess, unpredictable or as confusing and annoying as possible. So, I wish it were that easy, and I wish it would just be as easy as just coming down to the 0.5, bouncing it off, nice gap fills, et cetera, and off we go. But it's pretty rare that it's that simple. So we'll see how it goes. We'll see what comes to us and all that stuff. But pretty much what I'm expecting, guys. Also, another thing to keep in mind is that the VIX was up 5% on an overall market green day, which is interesting, right? So people are probably buying a bunch of puts, getting ready for tomorrow's potential CPI numbers coming out, which could be, who knows, honestly, right? Maybe some hedging going on, who knows? But that's something else to keep in mind. The fact that VIX is up 5% on a pretty much green market day. That is also quite interesting. So pretty much what I want to see, guys, and what I predict to happen is tomorrow's a red day. I want to see a red to around 290 to 285, somewhere between this range. I want to see the bull step in. I will personally be selling some puts, like the bullish position puts. I'll probably exit my SPY puts as well if that were to happen as well, because I did enter one more SPY put. I did talk about it on Friday, how if SPY comes up to this kind of 411, 412 area, I'll enter another put. I did. I'm holding that. It's a late October put. 400 put, I'm chilling. I'm not too worried about it. It's like literally 0.5% of my portfolio. I don't really care that much, even if I lose literally all of it, right? Not a huge deal. I'm not trying to be greedy. But for Tesla, again, what I expect personally is a drop down to somewhere around these levels, like I talked about, 290 to 285, ideally. And then I want to see the bull step in, and I want to see him move up higher to either 312. And if that somehow breaks, which, it might not, hard to say for sure. It will be pretty difficult, but it's definitely possible. And I think 325 is the short-term best case scenario, followed by a massive move to the downside. So if that were to happen though, we could potentially be setting up, a potential bear flag, something like this, right? So just keep that in mind, guys. This could be a potential bear flag being set up like this. Just something else to consider. We'll see what happens, of course, when it comes to it, if the pattern decides to kind of, evolve in that way, I guess. We don't know for sure. However, the RSI and the market itself doesn't look that bad right now. It doesn't look like it's ready to just completely collapse just yet. So, it needs a bit more time. However, again, according to the chart that I showed you guys several times, the seasonality chart, if you will, from 1946, second year, new Democratic presidents, it's been following it pretty accurately so far. We've had the June lows. That's exactly what we had here. We've had a run up into August, and we had a sideways August. It's exactly what happened. Then we had a massive fall. That's exactly what happened as well. September the first half of it has been pretty bullish. Exactly what's happening right now. And the second half of September is supposed to be quite bearish, actually. Not even fairly bearish, like decently bearish. So we'll see. We'll see what happens. We'll see if this follows through or not. At the moment, I'm expecting it to. That's why I'm not being too greedy. I'm being patient. We'll see. But either way, bit of a longer video today. There's a lot to talk about. Again, mainly because the market is in a very difficult spot right now, where in my opinion, it's extremely difficult to truly predict the short-term movement here, because it really could go either way at this point. Like, this is extremely difficult to predict until something becomes more obvious. But that's currently what I'm seeing, and that's currently what I am expecting. So hopefully that helps you guys regardless. I'll see you guys tomorrow. Tomorrow should be a pretty fun day. But otherwise, yeah, that's it for this one. Thanks for watching, guys. See you tomorrow. Peace.